This video is a review of SMFG's fiscal year 2025 first half financial results, the period from April 2024 to September 2024. SMFG Sumitomo Mitsui Financial Group is a major Japanese financial conglomerate. It is one of the largest financial groups in Japan and provides a wide range of financial services such as banking, investment, and consumer finance. SMFG competes with other financial giants in Japan, like Mitsubishi UFJ Financial Group and Mizuho Financial Group. First half financial results and target. The first half results show consolidated net business profit of 918.2 billion yen and profit attributable to owners of parent of 725.2 billion yen, both of which have set new record highs for the first half, following last year. Based on this result, the full-year target was revised upward. With the additional rate hike by the Bank of Japan in July and stronger than expected domestic business performance, an upside of 100 billion yen in core business is anticipated. Furthermore, additional 170 billion yen in gains on stocks is expected, with the accelerated reduction of equity holdings. The target of fiscal year 2025 profit attributable to owners of parents was revised by 100 billion yen to 1.16 trillion yen. Progress rate against the annual forecast of both consolidated net business profit and net profits are already around 60%. This fiscal year's first half financial results are much better than ever. Simulation of rise on Japanese yen interest rates, the impact on net interest income from the removal of the negative interest rate in March and the additional rate hike in July, is expected to result in an annual increase of 100 billion yen. This reflects the rate hikes impacting the entire year. For fiscal year 2025, anticipate a revenue impact of 70 billion yen for the year, with 30 billion yen in the first half. If further interest rate hikes occur, based on certain assumptions, 0.1% increase in long-term and short-term interest rates will result in an additional 40 billion yen in net interest income. For example, if the policy rate is raised to 0.5% by March, SMFG expects an additional 100 billion yen in net interest income for fiscal year 26. Interest rate hikes are expected to continue in the future, which will have a positive impact on banking business. Enhance global CIB through collaboration with Jefferies. The global CIB, corporate and investment banking business, has high growth potential. The key to enhancing this business is collaboration with Jefferies. Jefferies is a global investment bank and financial services company headquartered in New York City, which provides a range of services primarily focused on institutional clients, corporations, and governments. By combining SMBC Group's capital and client base with Jefferies' strong investment banking capabilities, the number of collaborative projects are increasing. In September, an additional investment of up to 14.5% was completed. SMFG is considering expanding collaboration beyond the Americas, Europe, Middle East, and Africa in the future. By accelerating this trend and strengthening global CIB business, SMFG aims to improve return on equity of overseas business. Reduction of equity holdings. SMFG has been selling cross-held shares in order to improve capital efficiency and successfully achieved its initial target to reduce 200 billion yen within the 3 years of the medium-term management plan in just 1.5 years. Under the new plan, SMFG will reduce by 600 billion yen over 5 years, including the period of the next medium-term management plan. Achieving this target will mean that SMFG has reduced its equity holdings by 93% on a book value basis since its establishment, reducing to about 16% of net assets in market value by March 2029. Reducing cross-shareholdings is expected to improve ROE, return on equity. Shareholders' return. SMFG increased the dividend per share to 120 yen, aiming for a payout ratio of 40% against the revised bottom-line profit of 1.16 trillion yen. This represents an increase of 10 yen from the initial forecast and 30 yen from the previous year, representing a 33.3% increase. For share buybacks, in addition to 100 billion yen announced in May, an additional buyback program of up to 150 billion yen has been planned. The total amount of share buybacks for the full year, amounting to 250 billion yen, will be the largest ever. Compared to the initial assumptions, the increase in the dividend forecasts results in an additional 40 billion yen in total dividends, and the share buybacks add an additional 50 billion yen. Therefore, almost the entire 100 billion yen upward revision has been allocated to shareholder returns. SMFG declares to allocate excess capital flexibly in the short term and balance growth investments and shareholder returns in the medium to long term. Shareholder returns have been continuously very proactive. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 3,767 yen as of December 13th, and the US dollar stock price is $14.89 as of December 13th. Current PBR is 1.0, and PER is 12.7. Dividend yield is 3.19%. Compared to the last few years, PBR, PER, and dividend yield show that the current stock price is relatively higher. However, like other megabanks, profits, earnings per share, and dividend amount have been increasing every year, and the stock price has been rising due to expectations for future performance. Conclusion: the current economic situation is favorable for banks. Additional interest rate hike by Bank of Japan is predicted in the future, and we can expect SMFG's profits to improve. The partnership with Jefferies has also helped the company steadily grow its lucrative global revenues. In addition, SMFG also received profits from sale of cross-shareholdings, which will be used as capital for banking operations, improving capital efficiency. SMFG's financial results were pretty good and expected to continue.